Hey, good evening, everybody. This is Chris Robinson, Robinson Tech Marketing. I was traveling today. I'm back in Chicago, so this is a bit late on the post-close settlements. We can start with the cattle, and we'll get into actually what's happening with the grains right now. Fat cattle Fed finished up 2.425 at 230.95. What's up with that? Well, it's a new high for the move, 6-week high. We gapped higher and we are trying to get up and go get that gap. In February, the gap gets filled at 233.42. We settled at basically 231. So we're close to filling that gap. Now, the big question is what happens after we fill the gap, right? Big decision point here. So you got to remember, 8 days ago, roughly on the 25th, we were sub 205. So here we are at 231, right? So a great recovery. And take advantage of it, please, guys. Do whatever you have to do to take advantage of it. March feeders up 4.85, $4.85. Again, we gapped open higher, basically on the higher cash trading yesterday. Now we have a gap with a bottom at 333.20. We are into the old gap, the gap from from October 24th to October 27th. That nasty gap. It's from 345. And the top of it had been 331.30. Excuse me. The top of it had been 337.50. Excuse me. So it's three. It was 337.50 to 345. Right. Well, we're right now. Today's high was 338.80. So we're into that gap. We settled at 337.60. So the question is, can we go get that 345 level? I sure do hope so. It's a blessing. And again, where were we on at the bottom? Well, how do you feel about 293? So from 293 to 338, just a great recovery in the value of all those animals. So it's an opportunity to hedge. Why? Because you want to be in a situation where a month from now something changes and we're back down at 293, and you're like, oh, I wish I'd hedged something. So hedging is not perfect. There's no perfection in hedging. Nobody can tell you exactly where the high is. What we're trying to do is capture the meat of the move, 70, 80% of the value of the gain. That's what we're trying to do. We do that with options. If you want to use futures, the problem with that is if you pick the wrong point to set your futures hedge, you can leave a ton of money on the table. How much? Well, look how much we've just rallied in the past 8 or 9 days. We're finishing up with the lean hogs. Lean hogs also a big percentage recovery, right? We a 6-week high there as well. If you look at Feb uh, lean hogs, we had gone from almost 93 cents down to 77 cents, right? That was a pretty horrendous sell off. We are within a stone's throw of halfway back, which is 84.84. We settled today at 84.17. The high today was 84.57. So we are very close to that halfway back point. So again, same thing goes, just what I said for cattle. Don't let them pull the rug out from under you. We're one headline away, one um, unexpected move away. And here it is, we're closing in on Christmas. Nobody wants to be paying attention to markets. I get it. I don't want to be. It's 7 o'clock, 7:40 at night. I just got back. I was down in Nashville for 2 days. I'm just back here now, but I'm doing the work, so you don't have to. So we'll be back at it in the morning. As far as the grains go, March corn still can't get above the 200 moving average, despite how good the exports are. That's all we hear about day after day after day, right? We need March corn to get north of 457, really. But the starter is we got to get above the 200-day moving average. So where is that right now? I'm running right now as I talk to you. The 200-day moving average comes in at 446. Just call it 447, which is where we're sitting right now. Or as I'm speaking to you, it's 7:40 p.m. and we're trading at 446. The high so far 447. So don't think that level does. Don't believe for a second that level doesn't matter. It matters to the computers. It matters to the long-term trend followers. And yeah, we're going to see if we can get above that and sort of turn the head here of these shorts. March beans, we're gonna stick with Jan. Jan, hit a key report. If you've been following my letter, I've been banging the pots and pans. The low that we had 2 days ago, 81. That was pretty much dead on 50% retracement of the $1.57 rally we had. Remember, October 1st, we were trading 10.12. We topped out, believe it or not, at 1169. Yeah, 1169 and a half. From 10.12 to 1169 and a half. We are dancing on the halfway back at 1090. The low a couple days ago at 1081. If we hit 1072, that's a 62% retracement. And it's also the top of that gap there. So we may go down there and get that gap. I'm not saying we can't, but I don't think it's a coincidence that we've been sitting here for 3 days now at the halfway back level. So it gives everybody a chance to reassess their risk, to manage their hedges. And that's what we're trying to do here. And then the wheat, there's no two ways about it. We are 25 cents away from retesting the contract lows. Wheat just can't get out of its way for fundamental and technical reasons. There's a ton of wheat out there. You've got Argentina dumping wheat now because they got a tax break down there to sell wheat. So their farmers are getting a tax break for selling wheat. So what does that mean? That just means more supply coming into the market. So that's it for this Thursday. We'll be back at it tomorrow, Friday. Have a good night. If you're listening to this, thank you. And I'll be back at it in the morning. This is Chris. Have a good night.